Alrighty, looks like we are good to go. Happy Tuesday, guys. Hope everyone is doing well. Per usual, just making sure we're all good on the audio checkup. Awesome. And it looks like we are good to go. Alrighty, guys. Welcome back to MTVTA. I'm your guys' host, Trent Manager. All my new patrons, welcome. All my new viewers, of course, welcome. Really glad to have you guys here today. A little bit under the weather today, guys, so definitely getting a lot of sleep last night, so I'm sorry if voice sounds like trash or I'm a little bit jumbly, so I took some medication and stuff, so I'm feeling much better, but it just is what it is, just getting into the colder months, so how fall can be. But long story short, guys, we got some really good stuff to cover today. Lots of drama, and go over some TA charts today, some readings, some Twitter posts, and some really good things that I think are going to be important to know as we move forward to September. We got lots of drama from United States, SEC, lots of overseas action. China, if you guys haven't heard about Evergrande's big real estate, we'll be going into that medium to briefly. Not going to go over into it, really high, just because there's a lot going on, and my expertise is not 100% on the situations going on over there, but just from the ripple effects of how it's having on the rest of the world, international markets and our markets, it's important for us to understand and see how this is reflecting on the crypto markets and of course the stock market as well, as we've seen some pretty big corrections in terms of the past couple days. So first off, let's just really get into it in terms of our Grammarly agenda today. So our first Grammarly agenda we're going to be going through, we're going to be covering 40k. Sorry guys, let me get this off real quick. So sorry. So Bitcoin bounces off the 43 ahead of fresh crypto comments from SEC Chairman. We're going to talk about that, Mr. Gensler, and what he has to say. Lots of still drama going on in the U.S. in terms of hindering innovation, and we'll keep fighting and see how things continue to go, guys. But hopeful as we keep moving forward. It's just it's just the hiccups is how it goes. Evergrande, we're going to be going over that, what's going on in the real estate property in China, one of the world's third largest real estate incorporation in terms of real estate in China, company buildings, apartments, housing, something similar to what we had in 2008. We're going to be going into that a little bit later. Coinbase, talking about Coinbase in their SEC threat, actually did end up pulling back their lending program from the SEC, from the SEC threatening Coinbase. So we're going to go into what kind of that means, and kind of what SEC is trying to put on the table for the rest of the big guys, as the Coinbase is the main star, their star pupil for testing things out and seeing how they react. So very really dicey week, but really good for information, and the catalyst of us long term is looking very, very good. I'm going to explain that as we keep going. And also lastly, we're going to go over some lessons learned, the internet's evolution from the blueprint of the internet, early 2000s to blockchain, possibly here in the next 5 to 10, 15 years. So that was just the housekeeping we got going on. Also, guys, real quick, just doing some other little housekeeping. Tomorrow we got our crypto loan platform with Nexo. It's a little bit longer than video, you guys can see here. I tried my best to condense it, but there's a lot of information that I think is important to cover in this because it's very in depth, and it's going to show you how to leverage yourself with some crypto-backed loans using your existing collateral. Kind of a paid to borrow in sense. So I really think you guys are going to like that tomorrow. Some really great information in terms of really getting a little bit more leverage in the market, and of course avoiding a little bit of some capital gains tax and save you guys a little bit of money. So I thought you guys would like that, so I did that yesterday as well. And last one, we're going to link this in the chat actually right now. This is free. I don't know if this is just YouTube Premium, but if it is, please let me know, then I can just record it because I got it for free. So this is the China Hustle. This actually goes over kind of what's going on in Evergrande, and also kind of tying in the whole of what happened in 2008 here in terms of the housing crash. So it's a really good watch. It's only an hour 24, so if you get to watch it, that's great. But other than that, we're done on the intro. We're going to get right into it now. So first off, Bitcoin bounces off 43 ahead of fresh crypto comments from the SEC Gensler. So if we go from the charts, we'll go into the charts later, but we know the war still continues. In my eyes, personally, just kind of from what I'm seeing, we understand the caution that these individuals are taking, but also we need to understand that these are continued older folks who are voting on things they just don't understand. So really moving forward here, what I see is that it's just grandma and grandpa taking too long to learn their iPhone, or taking too long to learn a new technology, and not really just understanding the ins and outs. Gary has made we all know, we've talked about it here, is that he's taught at MIT, he's taught blockchain, but at the end of the day, guys, he's still doing his job. As much as I like to, kind of give him the fresh plate and, cater him for his knowledge, but he's also still an older guy. The dude's still 62. Just because you teach something, just because you know something a little bit about something doesn't mean, it makes you an expert at it. We talked about it earlier, the same with Elon stepping into the crypto field. He's like, hey, you're good at EVs, you're good at innovation and engineering. This is apples to oranges here. You can't come here from your EV standpoint and try to come in here and express concern and express innovation when you have no idea what some of this technology does. So that's kind of the same layover we're seeing with really Gary and the whole overall United States. Realistically, where I see us in the long term, completely fine. We know we're going to get ETFs here soon. I know we've been hearing that for years, but in terms of us lagging behind, not only just kind of economically here in the United States, but in terms of like other things that we've kind of endured in terms of I didn't know if you guys know this, but 51% of China's students are STEM majors. Here, I don't believe even 25% of our college graduates are STEM majors. So you can kind of just see the differentiation between the educational and kind of the gap that we have here in terms of we have a lot of rights here. That's just how it is. Land of the free, home of the brave. And these comparisons are good because it's something that is very cultural based. China works very hard. It's not very time for fun. It's right down to it, and things get done. Work is work. Here it's a little bit more. Let me turn on my mic. I see it's getting a little bit red. But here, it's kind of more fun, a lot more freedom, a lot more democracy, and really great times here. But besides the point, how this really raised over to our 43K support is that we just really have fear right now, guys. So, with Evergrande, we're going to get into that next article and kind of see how this is rippling, kind of affect the international markets, kind of not just us. We heard it in 2008. A lot of other international people were saying, the United States, it's not going to affect us at all. It's just the United States. I'm here, and, Canada, this isn't going to really turmoil me over here. But, in fact, it does. So, as us, Russia, China, and the United States being such a large superpower that we have such large ties from everyone around the world, these little ripple effects can cause things like this. And not only that, but let's also mention that BlackRock, has ties as well. United States, so for an example, let me even back up here and make this a little bit more clear that me as an investor here at BlackRock, let's say I work at BlackRock, I work at BlackRock, I want to find investment opportunities because I'm an asset manager. So I'm going to look international for trustworthy and promising companies and enterprises overseas. And believe it or not, that movie I just linked is perfectly in tie as to how in the early 2000s, after our 2008, 2009 era here in the real estate market, that's when China had an absolute explosion in terms of innovation, real estate, and complete dominance in terms of their evolution. So I really try to tie a lot of these three things together, kind of like a trifecta, to make sense as to how really things are interconnected. So I really hope that that made sense. You guys do go watch that film because it actually is really good. I'm about 50 minutes in. So we get quotes here. Surely is nice to see some strength by Bitcoin, but all over to me still looks bearish to me. Short to medium term, yeah, could be bearish, but ultimately us sitting on that 20-week EMA line when we do go into the charts, that ultimately, like we've talked about, is just a catalyst to send us higher. The longer we ride that EMA line and build that full support, we possibly may be setting up right now for the 30 to 45K range could possibly be the bottom after our blow off top, just like we do have in Q4, like we have had for since inception. So keep that in mind. I like to kind of pull those on the table, so that's going to be something interesting that we can see and play out as we keep moving forward. So like I said on Evergrande, we're not going to cover this too crazy, kind of a medium kind of depth, just open up enough doors to relay questions for you guys and kind of do you off on your own research, just because I'm not 100% fully invested in this. But in terms of what we're seeing now, just kind of off the light, we have China's property manager Evergrande, one of the largest in the world, second or third largest in China, is defaulting on their payments. So $3 billion in back loan payments of bond registration. Employees are being owed money. We're seeing a complete collapse of one of the biggest real estate properties in the world, and they own, I think I wanted to say it was about 35% of China's mainland real estate. So you can see how that can tumble into an absolute chaotic monopoly effect. But not only that, let's also take a step back for the employees. So the employees are now sacrificing bonuses to be able to pay off debt that they had no idea about. So you can see how this is really getting scrambled, and this is a really, really bad thing. And here, we can even pull up the message here. Not this one. Let's go back to desktop here. This was an interesting one. My good buddy sent me this morning. I'm not sure if you can read. Yeah, you can't read that. But I will read it off the screen, my other screen here. I don't know why Windows does this. I can't wait to get Windows 10. I don't know why it does this. Let me read it off the other screen here. Was it gone? Where did it? Well, okay. I will find the link and then I will just link it. But back on topic here. employees are forcing to give up their bonuses in terms of paying back Evergrande's debt, and like I said, they own such a large property array in the mainland China that either we have one of two options here. China can either bail them out in terms of paying all this money to restore debt and figure it out in terms of employees and how to get these guys back on track, or like we've seen in the news if you've been following along, that China was just going to let them fail and we're just going to have to get a whole restart of the system. So we don't know the outlook of how long that is going to take. If they let them fail, they have one of two options, but the bailout is not really an option for them because that has been something that's been implied in their Congress and kind of their institutional business that they just don't do bailouts. That's just not a thing that they do for a lot of their really any company. I, of course, correct me where I'm wrong, but this is just what I have read and what I can really chalk up from what I've seen. You hear stories of some people putting $62,000 their own money in there. I mean, let's see. I mean, oh man, I don't even want to know what Evergrande's trading at. I think it's like down 22% today or something. But overall, it's a really bad situation. It is a terrible situation. 3 times worse than what we had here in 2008. Double the population. The wealth gap is extremely much larger than what it is here, and you just have so much more people who are just fighting over sometimes scraps at the bottom, the medium, or at the high. You can kind of just see how that 3-layer kind of just comes into effect. But ultimately, what we're going to see, we just got to keep our ears out and kind of see what is to come here. But the issues that really came from this and how this arose was really a lack of balance sheet integration. This has been happening for years and years, where the untruthful amount of debt has just stacked up, and there's just been no integration to do this. Evergrande has also taken ventures into car manufacturing, football teams, so soccer, not American football, soccer teams, entertainment parks like Disneyland, shopping mall centers, further out real estate loans such as big stadiums like we just had Mercedes-Benz Stadium here in the United States. It's a whole big pile of barrel that's just been really ramped up in the past in the past 12 years here, and there just hasn't when paper stacks higher, it can only get so high before it tumbles over. So this is going to be a very interesting thing to see and how it relates to us over in the West. So let's keep our eyes out in terms on just kind of praying for these guys. It's just tough. It's really tough to see because it affects so many people. So we will keep our eyes and ears out, guys, and we'll see how it keeps going. It just kind of seems that with time we just got to see how this goes. So Coinbase cancels lending product due to SEC threat. We covered this a little bit last week as well, with Brian Armstrong coming out in his Twitter rant saying the SEC was one of the only individuals hierarchy that would not meet with him. So really what we're really pulling out of this is that SEC still doesn't understand what they're talking about. They do not like the idea that they can earn more interest than you can earn more interest, 4% on your USD stable coins with Coinbase than the banks. Your bank is giving you 0.05%, something terrible like that, less than 10 cents a year, and they just don't like that. Bonds are going to forever be the backing of the currency, or bonds make up the complete structure of the monetary system, but they haven't been performing very well. We had a negative bond return yield not too long ago, a couple months ago, and that was the first time it's happened since like late 2009. So really what I'm taking into consideration to this is that the SEC is playing dad, and they're trying to wrangle things in their son's room that's just not something they know about. So, and I feel like I'm kind of repeating myself. I feel like a broken record here, but that's really ultimately what it boils down to. These guys don't understand what they're dealing with. They're scared because this jeopardizes their financial freedom for their future families or their current families. And usually anything would change. It just doesn't usually go well. I'll have to, before we get off here, I'll see if I can go find the seatbelt propaganda when seatbelts first came in the cars and people were absolutely losing their mind, protesting, not driving cars. Literally, people would walk like 6 miles to work instead of wearing a seatbelt. So I thought that was nuts. And also the electricity propaganda meme. You guys have probably seen that. It's where they have like the power lines and like electricity is like coming out of the power lines, like shocking people like on the street. Like you're just walking and then like a bolt just comes and hits you. And it's like, this is like the devil's work here, electricity. It's like, it's crazy, but it's dramatic change, and dramatic change takes a while to really set in. So that's really ultimately, what we're seeing. And that I just hope I'm not that old one day to where I can't absorb new advice. If I do end up living that long, that I just don't become one of these old guys. I just can't see new opportunity. That's just like my worst fear, really in life, honestly, is just not being open-minded enough to see opportunities like this. So Long story short, we will see how this continues. They've had to comply. I understand where Coinbase is, and I understand where they sit at on the panel. You are the first major cryptocurrency exchange in the United States, biggest in the United States, domination expanding all over the world. You have to settle on home ground, on home turf, regulations and compliances, and your boss is not giving you the correct regulations and compliances to do so. So, somewhat forcing you offshore, keeping 1 foot in the United States, 1 foot out of the United States, kind of just on the fence as to where we're going to go or what we're going to do. But ultimately, where I see it heading is that it's just a very dragged out long process. Like, these guys are going to drag this out to the very last minute in terms of what they can approve and what they can't approve and all the edits they need to do and understanding and knowledge. So it's just really what I see it is just a plain view is just people dragging out something that they just don't want to deal with. And this is something that they hate to deal with because they don't understand it and it makes their head hurt. So that's honestly my best background as to why the SEC is so slow and just doesn't really have time, or not even have time, they just choose not to. That's just really honestly my put down right there. They just don't care. So, and also going into here, this is a longer article, but gave some really good points in terms of the internet's evolution as a blueprint for blockchain interoperability. Pretty much the same thing like we talked about, from the concepts of critical infrastructure to achieving mainstream adoption. We've talked about Web 3.0 plenty of implementations of U.S. healthcare, real estate implementation, and supply chain management. We know more than ever after our whole pandemic that supply chain is something that we need to take stable, and that's something that cannot get backed up in terms of just full operation. We supply chains just gotta have different outlets and different infrastructures, and to make sure that they're staying on task, because what we saw this whole pandemic was a real eye-opener in terms of how important it is to get things on time. But if this is good for you, I'll link this too. This is a good read. I didn't want to go through all of this, but he made some really good points in terms of potential blockchain integration, just how things are moving exactly how they were in the early 2000s and so on. I make that comparison so much is because history repeats itself pretty hard. It may not do it exactly, but if you think that this is something that's just going to go off course and not follow previous events of critical changes, that's just crazy because it happens often. September historically is a terrible month for Bitcoin, for crypto, and for stocks, and it's proven that to us multiple times. So the probability of us having a bad month this month was very, very high. It had a chance to not happen like it did in March, but also you need to take into consideration that history is still a huge chopping block in terms of what can and will happen. So it may not happen the same, but it still will probably happen in the same relative space. So awesome. I actually wanted to show you guys this, which was really cool. Twitter and crypto, and also Apple event. This is what they're going to be displaying in terms of their NFT platform and swapping. So the implementation of crypto wallets on Twitter, you can swap like NFTs. This is like a whole CGI mock-up. This is nothing like a real product yet. So don't go crazy over this just yet. This is just this is just CGI. But here I want to actually really let me start. Oh, sorry. Let me start this over. And turn the volume down. But I think I thought this was freaking awesome. Sorry, I don't know why the quality's so bad, but Jesus. Sorry, it's too much. Too much, guys. I'm sorry. Yeah, pretty tight. I mean, I like it's pretty awesome. I really do enjoy, even if it is just a CGI mockup. The concept is awesome. I like the whole exchanging. I like the whole how you can really just exchange that NFT action, and I like Twitter's interface. I really do. I gotta give it to Jack. I love even the desktop version. You usually don't get really good desktop versions with a lot of social medias, but ultimately really dope. Something cool to look out. BlueSky is the project that does a lot of the blockchain management for Twitter. This is where they're doing all their testing, API connections, lots of different Twitter implementations. So the cool thing about media now is that we talked about it also is that they're moving more from media companies to metaverse companies, and we've talked about that a little bit, what metaverse is kind of going to be looking like. So if that's something that you want to really brush up on, go into my channel. We have a metaverse. We have a couple. We have like 2 or 3 to where we kind of go over the what it is, what it can do, and how it's going to be beneficial to not only just social media companies but kind of a whole virtual world as to where real items are going to be just as equal as real physical items. It's a very awesome concept, and as the technology improves, this is something that's very, very real. So definitely do not sleep on that. Most definitely, that's something I really agree that most people should be aware of, because it's going to be coming faster than we think. So let's hop into the charts and let's see what we have here. So we still have our corrections in play, and where we're sitting at right now is $42,000. So before we freak out and we're just screaming, running for the hills and stuff, let's actually look at this and see what we can see from this, because when in doubt, zoom out. So let's see what history has told us in the past of things like this. So we're sitting at $42,000, which is a previous resistance for us, and that we have not really tested for support very much so at all. So let's see, the other time we tested for the support, tested it here for a little bit, fell through it, couldn't hold it, go back to here, and this was, let's see, this was May 17th. Then we go back to, let's see, the last time we tested support, I guess that candle wick is there. I don't even like really counting that. But February 28th, twice, and now again September 21st. And let's make sure we didn't miss any in the previous 42,000. But we have in total tested that support line for a critical baseline of 3 times in its entire inception. So before we get all critical on BTC and say, oh my gosh, it's over, let's also remember that we have not jumped on this trampoline long enough to build those fibers correctly. So that's one thing. And also let's also look back at history of what 42,000 kind of hasn't told us in the past as well. So we've seen 42. That was kind of our pump up that we had back in February, and I mean we've talked about the consolidation of we may not see an all-time high before the end of the year. Of course, I'm still holding my little price prediction. Of course, I don't like to do it often, but 100K by by January 1st or a little bit after was somewhere where we always thought. I don't think we've changed that at all. If I have, please correct me, because we do a lot of live streams, a lot of different tutorials. So please correct me if you go back a video and you see me talking about something else, but I'm pretty critical that we've kept that in the cards for a while. So let's take a look at our EMA lines. We definitely do not want to be closing below our 20-week. Not the worst thing in the world. It just, all this signals is that we are kind of in a bearish pattern, and we're kind of in a bearish momentum right now. That 20-week. So I like seeing us above 43 to 46K. That's kind of where I like the sweet spot for us to be at. But ultimately, the short to medium term where I see us at, we know September is awful. We know historically it's bad. It's bad for stocks. It's bad for cryptos. We could ride. What I'd love to see us do is ride this EMA line, just completely build this as support for the rest of the month, maybe a little bit into October, and then we continue to trend higher. As we establish this line. 3 times is not enough to give a firm thumbs up for, hey, if we test this again, buyers need to hold this. Bears have full control of this range right now until we do get that that thumbs up support. But like that being said, what I see now as term of opportunity, I see a great DCA opportunity, dollar cost average. We've been doing, or at least I've been doing. I tell you guys what I'm doing in this market. So that's kind of just what I'm doing and kind of what I'm playing the fence on right now. Now over to Ethereum is a little much different. Ethereum looks really, really good in terms of the technicals. So we are holding that $3,000 line very, very, very well. So you can see why we are doing that as well, because we've tested it so many times. We've had so many bouncing around points, just like we had here. We had a whole month between $3,000 and $3,200, up to kind of the $3,300 range, and we've established it pretty well. We broke to it in May 19th. Of course, that was our kind of local top at the time, and we had our downtrend, testing some lower parts. But you can see here we had a 23. This is a more constructual way of building support. A whole month of completely bobbing around this line, and BTC just hasn't had that just yet. But in terms of Ethereum looking good, I mean, man, it looks really, really good in my eyes. We're holding this line really, really well. If things, of course, do not hold, our next stock could be 2,500. I would imagine would get absolutely just bought up instantaneously. We'll look at ultrasound money, or I'll put a post up in the Patreon after the live stream to show we are having deflationary blocks. So what that means is that the mining of Ethereum, a proof of work, that the network is being utilized so heavily from whether that be NFTs, DeFi, whatever the utilization rate may be, is that we are now having deflationary blocks in Ethereum. So now we are burning more ETH than we are actually minting, which is the whole plan of 1559, like we have also discussed as well. So short to medium term on Ethereum could definitely see us just kicking it the rest of the month, bobbing around exactly how we were for the time being, and then ultimately, we will see. We know what Q4 holds. If you've been here any sort of time, it'll almost be a whole year here, guys. Actually, believe it or not, that we've been doing this. So we've watched a whole year of this entire market. I mean, granted, it was a bull market, but still, this was really a time for so much learning and so much development during this market cycle. I know you guys remember all this. Like, it's just so crazy. We'll have a pretty fun anniversary or whatever. So, but you guys remember all this. You guys remember exactly all these candle days that we had. So, ultimately, all good in the really all good in the hood. I don't see any issues where we are right now. People are just scared. We have uncertainty over in China. We have uncertainty here. We don't know what's going to go with the infrastructure bill. There's a lot of what ifs right now. Stock markets, there's just a lot of things people don't know. But if you keep your emotions in check, you stick to your game plan no matter what happens. Always stick to your game plan. Things always will end up fine. So that is all I had to wrap up for today, guys. That's the last thing I wanted to cover today. Make sure chat is all right. But share this for friends or family. Anyone you think would value from this information. Consider joining the Patreon if that's something you would like to do. We do free coding tutorials, DeFi platforms, passive income strategies, and of course, we have new video coming out, so I try to squeeze in videos throughout our live streams at least once or twice. But thank you guys so much. I really appreciate it. I will see you guys on Thursday. Any questions you guys have, shoot a DM or shoot a comment, and I'll get back to you soon. Thank you guys so much, and I'll see you guys